Hello everyone, welcome to the Lore of the Coins. Today we're just going to be going over another know exactly where price will go. I'm thinking about making this just into a series, as I pretty much just cover all the topics of price action, and understanding price action is the one key that's really made me successful in the markets. So yeah, I think if I make this a series, and anyone who really keeps up with the series will, I'm fairly confident that you guys will become a way better trader. So yeah, I'm about to just make this a series, and we'll go over Bitcoin since this is the asset I trade most often. Yeah, before I get started, I just want to give a quick shout out to my Discord. We just do live trade callouts. Let me bring it up. We just do live trade callouts here. This was my scalping session yesterday. I had a monster scalping session yesterday, and this was pretty much just all just with price action and kind of just knowing where price will go. So yeah, if you're kind of interested in either scalping, swing trading, day trading, we do all that in here. So just make sure to give the Discord a look. So yeah, let's see. So if we go back here, this is one of the main things I wanted to cover. If you're trading New York session yesterday, you saw this ascending wedge form, and this is a very, very actually bearish pattern since we actually dropped into the ascending wedge. Usually when you drop into it, the chance that you go down is really high, but this definitely is a retail pattern. And the reason you don't trade retail patterns like retail trades it is because market makers can absolutely, they can just wreck you. If you had like a leverage position open here for a short or something and you just didn't set a stop for some reason, this is like immediate liquidation. So yeah, so where this price went, knowing exactly where it would go, this is actually a trade that I posted in my Discord. So if you go into the 15-minute, I saw this zone of supply right here. This is known as a bearish order block on the minute 15 here. This is just an area. This is just an area of high supply. So pretty much, if price wants to dump, someone needs to buy the dump. That's just how the order books work. So since there's just a high amount of supply here, or people who are wanting to sell, it hits this area, quote unquote resistance, and then it dumps. That's just how the markets. That's just how they run. They just run on liquidity, and that's something that's very important to understand. And the reason that it shot up here is because there's probably a short squeeze here. The reason it shot up all the way up here is because there's another short squeeze of people who went short in the market right here. And this is a prime example of going short too early. So if you went short right here, you probably had your stop losses set right above, and you just get immediately triggered. And this move happened in like less than 1 minute. So it was right at the end of New York session. So yeah, make sure you just don't short for no reason. You wanna have a really good reason to short. So yeah, this is the order block I was looking at. The main reason I was also looking at this is because we had relatively equal highs. So I'm gonna mark them out here. When you get relatively equal highs like this, they're just so likely to get swept. So when this price was dumping and the ascending wedge was forming, I was a little cautious because I saw these equal highs. I felt like it was gonna get swept before it went down. And just remember, before large moves down, the price needs to go up first to wipe out liquidity, and vice versa. Before we go up, price needs to move down to wipe out liquidity before we go up. So yeah, when you have relatively equal highs like this or relatively equal lows, just be very cautious of setting up trades around them, as they're very likely to get swept. So yeah, my conviction on this trade was that we have a order block here and relatively equal highs. I thought it was going to sweep it. On top of that, we had this imbalance right here on this candle. The imbalance is just the gap between two candles above and below it. So as you can see right here, let me actually zoom in, make this a little easier to see. You can see that this wick on this candle comes right here and cuts this candle off right here, and this wick cuts the candle off right here. So this is known as an imbalance. Imbalances just occur when there are too many of one type of order. So in this case, there's too many sell orders, so all the orders didn't get filled and price just dumps. And same here, right here and right here. This is also known as a fair value gap or an imbalance. Understanding these are also very important because imbalances, more often than not, I would say, if I were to give like a percentage, like 90% of the time they get filled. For example, I'll give you a couple actual examples here. So this imbalance formed, boom, gets filled. This imbalance forms, boom, gets filled. We had an imbalance right here, a fairly large one. You can see it gets filled. It got partially filled here, and then the rest of it gets filled here. We had an imbalance here. This huge candle fills it. This probably happened. When did this happen actually? Oh, it happened this morning. I wasn't trading this morning because Veterans Day, I was just taking a break. But yeah, that's something to note. So that's, when you want to know exactly where price would go, these are the things you have to identify. Areas of high supply, areas of high demand, relatively equal highs, relatively equal lows. Just kind of identify where the liquidity is. And if you have a little trouble identifying liquidity, make sure to check out my price action tutorial on identifying liquidity, as I hopefully this will be really helpful for you if you're having a little trouble with that. So, but yeah, I'm gonna go over this trade. So this M15 order block and liquidity, that's pretty much, I want to say that's all the conviction that I need for a trade, but it's a fairly high conviction, especially because we were on a decent uptrend here. Price is getting pretty exhausted, and we're due for some downwards movement here. So yeah, this is definitely an area of interest I was looking at. If you take the fib, let's take the fib from this swing high to this swing low. Yeah, it's like right in the 0.5 zone as well, so that's a little bit more confluence. This is more of like I would say like a weekly move. So I'm gonna take the VWAP and go to the weekly and see where we line up. Yeah, it's kind of towards the VWAP. So this is also like an area of a resistance as well. If you like to trade off EMAs, we can take a look at that. Take a look on like the 1 hour. Yeah, not much on the EMAs. Check the 4 hour. Yeah. Usually I only use EMAs when I'm scalping, but not much on that. But yeah, this is just an area of decent confluence here. It's not a very highly confluent area, but I would set probably a low or a high risk trade right here. And this is exactly what we did in the Discord. I actually didn't even know that the fib lined up here. Let's see. So the short position was at the start of this order block here, and right at the end of the order block, because if price goes past the order block, this trade is invalidated. That's why you want to set the stop there. And I had my profit set at this area liquidity right here. So this is kind of what my trade looked like. A 4.68 risk to reward. That's really, really good. So yeah, that's like kind of one way. It's kind of like snipe entries. You just want to find areas of really high confluence, especially using the VWAP. I think VWAP is by far one of the best indicators. And I don't use many indicators. I'll use like the VWAP, and I'll use the RSI and a oscillator here. They're pretty much both oscillators, but I like to use this one for scalping. So yeah, I mean, I really don't use indicators much. It's just better to understand exactly where the zones of supply and demand are and just trade off that, since that's just exactly what runs the market. So yeah, we had another zone of demand right here that we just tapped into here. I'm gonna mark this as another M15 order block. Yeah, we tapped right into this. I was not trading this, so I'm not in this trade, but this would have been a good trade setup as well. We swept all these equal lows, and yep, tapped right into this. So knowing this entry, this is what I would have kind of advocated for this trade, is that we have a fair value gap fill. Since we didn't fill all of this, you know, if you went long here, I would have likely advised against it, since this fair value gap wasn't fully filled. I would have seen another dump coming here, like this one. So yeah, like number one, fair value gap fill. Number two, sweep at relatively equal lows. And number three, into a order block. And then pretty much what you want for an entry is a break of structure into a change of character, or sorry, not a sweep into a change of character. For example, if you want to take a short trade here and catch this dump like this would be actually not a great trade, but just say you wanted to catch this dump. This is a very high risk trade. Risk to reward is pretty bad, 1.5. But how you wouldn't want to set up this trade is like this. Let me turn this VWAP off. So we'll go onto the hourly, and pretty much the things you want to look for are a sweep and a change of character. So this is known as your sweep right here. Actually, let me go to 30-minute. Let me see this a little better. So you have liquidity right here built up. If you shorted early, you're gonna get swept, and that's what this candle did right here. And that is known as your sweep. I denote it by a dashed line and an X. It just kind of helps me understand it. And then what you want is a change of character. So the last highest low that did the sweep, you want to take that low and see if it gets broken. And you want to close candle. Wicks do not count. So you want to close candle on it, and I denote that by a Y right here, this line. So now that this candle is closed, what you want to look for is a re-tap into a zone of supply. And since the zone of supply is so large, like this is on a 30-minute, you go on the 15-minute, it's still this big. 5-minute, you can maybe take this candle, but if you did, you wouldn't have gotten picked up. Like the order started right here, so this is kind of the area that you would be looking at, but this is the entire order block. So yeah, this is like not a trade that I would really take, but if you wanted to take it, this is how you snipe your entry. So yeah, you have your sweep, you have your change of character, and what you want is now a re-tap into the zone of supply for your entry. And you can see that, let me move this away here, you have this large M15 order block right here, and you can see that we tapped in twice. And the way you know there were a lot of orders is that you have wicks that are kind of longer. When wicks are large, that means there were a lot of orders there and the price just like spiked down. So, you know, you would plan your trade like this. So sweep, change of character, where's the zone of supply? This is your zone of supply. You set your entry at the zone of supply, stop at the end, and then your target at another zone of demand. So like right here. So that's how you would set up your trade like this. Let's see. You know, you can also check your fib. Swing high to swing low here, since we're going for a short trade. And yeah, it's in a pretty good area between the 0.65 and the 0.786, which is like, you know, a good area to set up trades in. And you can see that we tapped in twice. So you had two chances for this entry here, and that's how pretty much you would just, you know, you would take this trade. It's honestly kind of that simple. This is just for like, I guess for like day trading. I guess you could use it for like swing trading as well, and even for scalping. So, you know, there's a lot more stuff you can look at in terms of like, you know, where you're your other VWAPs line up on other time frames, where your POCs are. Yeah, but I think just like the very main concept that you have to understand is understanding just being able to visualize where high supply and high demand are. And you know, it definitely comes over time. Like now, if I just look at a chart, I can kind of see these areas relatively quickly. I don't spend as much time on the charts anymore. But definitely when I started out, it was just a lot of time on the charts. So yeah. So now we'll kind of go over where I think Bitcoin's gonna go. We are setting higher lows here. So I am looking a little bullish. It looks like Bitcoin's kind of dumping right now, actually. So yeah, we actually getting a little reversal. So it's cool that this is happening live. So this is your sweep. Let me get rid of this. So this is your sweep here. And we'll see if this candle closes, but if this candle closes, this would be your change of character. And if you have your sweep and a change of character like this, you're gonna actually see a reversal, and we'll actually head up here. So let's see. And if you want to identify another one, if you're trading this on the 5 minute for like an entry, this is also your sweep and your change of character. You know, I hope like visualizing this, you know, becomes easier as I just go over more of them. But once you have like these, it's just really easy to see where price action is going to go, right? Like you have your sweep and change of character, price is going to go down. This is your sweep. Perhaps go to like 1 minute for this one. This is your sweep, and this is your change of character. But I think this is just like price manipulation. But yeah, we kind of had upwards movement after that, and we're getting another one here. Yeah, there's even like more up here on the 1 minute, but I usually don't like to use these on the 1 minute. I think 5 minutes is like the lowest I'll go for sweeps and change of characters for entries. So, and you have to make sure that this candle closes below this as well. But yeah, let's go on to the daily, because I kind of want to see where Bitcoin's going to go on in the macro scale. So you can see that we did tap into a zone of demand here. We swept the key level, go into a zone of demand. So I think kind of on the longer term, maybe on like the daily to like the 4 hourly, if you're kind of looking for like a swing trade, I would definitely say we're looking for a bit of relief here. I think we're going to go up. You know, we do have this fair value gap that needs to get filled right here. I'm going to denote it by a dark gray box here. And then, you know, we have a zone of liquidity here. I'm just going to mark this with some dollar signs, make it a little easier to understand. There's a lot of liquidity here, so I can definitely see, you know, just by the same logic, zone of demand right here, right? Or zone of supply, I mean. I'm gonna make this red here. So we have the zone of supply right here on top of liquidity and this fair value gap that wants to get filled. So this is on the 4 hour too, so you know, this is definitely a level that I would look at. This other zone of demand right here, this is kind of a big one on the 4 hour. We'll see what it looks like on the 1 hour. So when your zone of demands are really large, you want to go on to like lower time frames to see exactly, or if you want to constrict your order block down. So, you know, you can constrict it down like this. Yeah, this is a very possible area. Actually, we've already tapped into this, so I'll probably get rid of that. I think this area is kind of a highly confluent area. I'd definitely be looking at this for some sort of reversal if we ever get up here. Yeah, I know this price is dumping, but I I don't think it's gonna come back down. If it does, probably re-tap into this order block. The reason I would be inclined to think that is because this wick is really large, and usually large wicks gets retraced. So like we had a large wick here, gets retraced. Large wick here is probably gonna get retraced. But the only reason I think we're gonna go up, or a couple of the reasons, because we are sending higher lows, and usually when you're sending higher lows, you will for the most part see movement up. But yeah, until I think if we break this level right here, what is this, 18,700, I think that's the key level that we need to be looking at. If we break that, we definitely will hit this 20,100-ish level and probably see a reversal back down. And if you're wondering why, it's because on the 1 hour, this is our sweep. And then our change of character, actually, is that our sweep? No, that is not our sweep, actually. Our sweep would be like this right here. Boom. So, actually we're gonna have to maybe go down into a lower time frame here. It's kind of hard to see where the sweep is. There we go. So this is a sweep, and then, oh, we actually do have our change character. I think we actually already covered this one. So yeah, we actually are already on our way up here. So yeah, I mean, we're definitely on an uptrend. I definitely wouldn't take like a swing short trade here or anywhere until we have like another confirmation of a market reversal. So I think we are definitely on the short term, at least, you know, we're gonna see some relief here. You know, best case scenario I think is around 2100 that we'll see, or 2800-ish. That's the level I'd be looking at for a short. If you are wanting to get back into a long, oh man, there aren't really any good levels. You know, I think we've already tapped it. Maybe if we can re-tap into this order block, I'd look for another long, but yeah, I think I'm just kind of rambling at this point. I hope this video really helped you guys. You know, I'm just kind of spitting on some information that I know, that I've learned over the years on just kind of how to read the markets. And yeah, I really hoped it was helpful for you guys. You know, if you guys liked it, just leave a comment down below, like, subscribe, you know, the whole YouTube thing. And yeah, have a good day, and I'll see you guys next time.